Bitcoin strategy. Welcome to Bitcoin Escape Plan. I'm Jacob. Tomorrow's Thanksgiving. Let's take a look at the charts. So today's topic is about MicroStrategy, the company, formerly known as MicroStrategy, now known as Strategy, and just kind of what's been going on in the news lately with Chase Bank trying to nuke it and get it taken out of indexes. Also, my price analysis going back historically for the chart and why I predicted that it was going to underperform this year, which I told people in calls earlier this year. If you're enjoying the content so far, please leave a like and subscribe. And as always in these videos, I'm going to start off over on Bitcoin. Go take a look at the 4-hour chart, see what we have coming up here that is worth paying attention to. So I've talked about this level a bunch of times on Threads. Looks like we're sitting on it right now. That's 90.4K, which is actually a daily pivot. You can see it right there. So that's currently what the price is trying to decide on. It looks like we actually closed the day slightly above it, just barely above it. So that's going to give us permission probably into Thanksgiving to go to this point here. That's 93.8K. It's going to give us permission to do that. Now, it doesn't necessarily mean that it's going to do that. And then that corresponds to this fib pivot here, 93.6 on the 4-hour, which is pretty close. It's only, whatever, $200 off of the SMA on the daily. But I would imagine we'll see a reaction somewhere between there and there. If not tomorrow, then on Friday when the markets open. But since everybody else is closed, I think there's a good chance that we do see some activity tomorrow for Bitcoin. All right, so let's go back to strategy. Now that you have that little burst of trading knowledge. So if we take a look at strategy, let's go for the broad swaths. So to kind of summarize what has been happening recently, JP Morgan Chase has been, issuing public statements that they don't think MicroStrategy should be involved in passive indexes. There's talk of whether or not MicroStrategy is going to be accepted into the S&P 500 on this next vote. Coinbase and Robinhood were both selected earlier this year. These are like the main crypto competitors in terms of like public stocks that strategy was up against, even though they have a very different, company model than all the other ones are. But specifically just looking at it from a chart perspective, I had already anticipated based on the 2021 run, and I was telling that to people here when they were asking if they should be allocated to MicroStrategy or not. Oh, actually, sorry, over here, not over there. Around here, I was saying I think we're going to see the same thing as this, where we saw an initial peak in 2021 and then a failure to set a new higher high later in the year. And as you can see, that is pretty much exactly what we saw for MicroStrategy, where, right when the election happened, we saw an initial run up for the price, and then it failed downward. It did not test the monthly SMA, had its final peak, looks like in July, in a very similar pattern, just quicker. And then it has begun its descent to the downside, which, as you can see over here, was less sharp than it is now. So all of this kind of goes back to, do we believe that Bitcoin is done running or not? If Bitcoin is done running, this chart will continue to break down as close to here as it can get, which obviously not very good if you're holding a lot of MicroStrategy. Now let's tie that into the JP Morgan Chase story. And in order to do this, you kind of have to understand the history of what MicroStrategy has been doing for the last year or so. So for the last, actually, it might be longer than a year, but it's been most prevalent this year, where they're issuing preferred stock options like STRD, STRK, and STRC are the ones that I'm most familiar with. There may actually be one other, but those are the three that I'm most familiar with. And essentially what STRC does is STRC offers a monthly dividend of, at the moment, about 10.5%, and it will continue to do so in a tax-deferred method, because my understanding is that you're getting a return on capital, not strictly speaking a dividend. So it's slightly more tax efficient than anything besides a U.S. Treasury note, essentially, but is producing more than double the performance of a US Treasury note, which is obviously really appealing. So why is JP Morgan pissed about that? Because that puts them in direct competition with this company, essentially. So I'm JP Morgan Chase. I've got $4 trillion worth of customer funds. And let's say that 20% of that is in boring old money markets that are providing like 4% a year. So that's where a bulk of the money that's flowing into here. I'm JP Morgan Chase. I want this money. I don't want MicroStrategy to have this money. I want this money. I want them in, those low bearing, but safe, relatively speaking, essentially savings accounts, money market accounts, but it's controlled by JP Morgan Chase. So if we have an asset that is tied to Strategy, where Strategy holds, I don't know the exact numbers, but they have more than 640,000 Bitcoin, which is a lot of Bitcoin. They have essentially billions of dollars of Bitcoin. And it's my understanding that they're issuing these convertible bonds and essentially are giving themselves a Bitcoin rating for how much Bitcoin they have per dollar. And from what I saw in a recent interview with Saylor, it's about 4 or 5 Bitcoin per dollar. And that's how they're paying you their return on capital, is for every $1 that you give them, they're able to essentially have $4 or $5 worth of Bitcoin to back it. I'm not going to claim to fully understand this. All I understand that really is most important to this is Michael Saylor has convinced himself that this is his opportunity to create an Amazon. This is his opportunity to compete with Microsoft. So he's going to put everything that he possibly can into making this thing successful, which means his enemies are companies like JP Morgan Chase, where JP Morgan Chase is now fighting with companies like this. And I'm sure some of you saw Jack Mallers as well. Jack Mallers was debanked by Chase Bank, and he framed the letter. He's another like one of these popular Bitcoin treasury companies, essentially. I think Strike is actually a little bit more complicated than a Bitcoin treasury company. It essentially allows you to take your salary in Bitcoin, as far as I'm aware, and has a couple other features as well. But specifically these, Bitcoin treasury companies, I had talked about this with my group previously, where I think that those are going to be the Celsius of the next cycle, essentially. The BlockFis, the Voyagers. I think those are going to be the companies that go out of business. Now, do I believe that Strategy is one of those companies that's going to go out of business? Not really. I think that they're well capitalized enough where it's not going to happen. I think that their average cost for Bitcoin is like 74,000 or something like that. But it's my understanding that they don't have to sell their Bitcoin in the event that it goes that low. They're not going to be in a position of a margin call, as far as I understand. So what we're looking for essentially for the price is, I would imagine we're going to get a retest right here, which is what we're currently seeing. We may get one lower if Bitcoin continues to break down. But if Bitcoin does experience a serious relief rally, then this will likely just be an extended drawdown, essentially, of what Bitcoin is facing at the moment. Bitcoin is essentially on this candle right now. So MicroStrategy is just front running whether or not Bitcoin is going to have that next drop. But I really think that the basis of what JP Morgan Chase is trying to do is they're trying to prevent Strategy from having passive flows ongoing by being added to the MSCI indexes, and by making sure that they don't get added to the S&P 500, which it really just amounts to like passive capital flows. The thing that makes this interesting is if they're able to make SDRC work and continue to work. And I have been experimenting with other products like ETF-based products like MSTY and WNTR earlier this year, where they were essentially using an option strategy where for WNTR, they were buying puts every month, and mixing that with, I believe, like a 90 or a 95% split of U.S. Treasury bills. So that's how they're able to pay you a yield every month, based on the price of MicroStrategy going down. And it seems like both of those products, they're like 2x leverage products, I believe, through Yield Max. Both of them were not performing very well. Like they were continuing to go down, even though theoretically they should have been going up. And MicroStrategy, I think, that was happening because they were providing their own. They were providing Strike and Strife and Stride, and Stretch is now the most recent one. And it still kind of remains to be seen because we've been in a downtrend for Bitcoin whether or not those products will be useful. Like they're supposed to peg at around $100, and they're all below that, I believe, as well as they all peaked above it. Somewhere around here whenever this was happening. So it's kind of similar to a treasury bill where a treasury bill is going to go down at the beginning of the month because, people are selling it and redistributing cash elsewhere and they already got their dividends. So now they're, waiting for the next one or whatever, before they reallocate into it. But essentially that's what we're going to want to see going into the end of the year. Is it's very likely we see the price continue to break down harder for MicroStrategy than for anything else. And something like a Stride, a Strife, a Strike, it may be a really good time, similar to like if you ever caught a moment in DeFi where USDT or something like that is depegged temporarily from it being $1. Say it's like 80 cents for you to buy Tether for whatever reason instead of it being $1. That's a great deal. That's a really good deal, essentially, where you're going to be able to buy more Tether than you would ever normally be able to, and it's going to pay you back. So I think it's going to be a similar instance with MicroStrategy, where I do expect it's going to break down to here. It may even break down into here, quite frankly. There's not really much preventing it from doing so. It'll be very cyclical, the same way Bitcoin and everything else will. But with more volatility, because it's higher up the risk curve than Bitcoin is. But essentially what that's going to mean is, say Stretch, which I believe is like $96 now, say Stretch gets pulled down to $70 or $80 when MicroStrategy is hitting this this point where it's been continuing to go down and continuing to break down. Essentially, when it does recover, which it will, it just might take a little bit longer. It'll take, the Bitcoin news and everything like that. It'll kind of take this immediate war with JP Morgan Chase to blow over a little bit. It may never blow over, because the fact of the matter is, essentially what strategy is trying to create is somewhere to get a 10.5% passive yield on, excess capital. And what that's going to mean is that's less money that's sitting in a JP Morgan Chase bank, and that's more money that's sitting in a brokerage account in, Strategy's preferred stock, which JP Morgan Chase doesn't want. They want your money in a market managed account or in a hedge fund that they're associated with and that they bank. They don't want to, kind of relinquish their control of capital over to these Bitcoin backed companies. Now, what does that mean for all of the other Bitcoin reserves, or what the hell they call them, Bitcoin treasury companies? I think most of the other ones are going to really struggle in a way that MicroStrategy will not, just because they're actively inventing new shit. Like they're creating Bitcoin backed bonds, which is the direction that the banks will have to go in. I know that JP Morgan Chase is now pivoting to create derivative products of the IBIT ETF in particular. And it makes sense. They're in bed with BlackRock to a certain degree. So it's completely logical that they would try everything that they can to profit off of the price of Bitcoin without having to directly allocate to it, because it seems like that's just not what they want to do. They want to continue to do the custody route instead, which is smart for them. All they have to do is hold it, and then they can issue collateral-backed loans to their customers. I don't know the exact rates for that, or if they've rolled out that program or not yet. I know that a lot of companies or a lot of people are removing themselves from JP Morgan Chase because of all this crypto FUD, of them coming after Strike and them coming after MSTR. I just think it's a coordinated fear effort. If we do see a relief rally for Bitcoin, which it's kind of looking like it, we really need to see price get to above like 95, 96,000 before it's like any real signs that something is happening instead of just like a minor bounce. But if that bounce does continue, MicroStrategy is going to get hit even harder. I know that there's been a bunch of stories about JP Morgan Chase having a lot of puts open. I haven't found any confirmation of that, but I think it's more just that they are in direct competition with these companies who are going to be offering a financial product that directly, say I'm a really rich person, say I got $40 billion and I have about 30 billion of those dollars is actively invested, whether in companies or land or real estate or assets or whatever. And I have the other $10 billion, which is liquid. It's incoming cash, or it's cash that I need to pay off other loans or equipment or whatever. Where am I going to place that $10 billion? Typically it would be somewhere like a high yield savings account or some type of managed account that's pretty quick for them to convert the money in and out, instead of it being like a CD or something that's going to be locked up for an extended period of time. So that liquid cash that they have, why wouldn't they just have it in an asset like Stretch, where they're able to buy it on the open market? You can buy it on something as simple as a Robinhood. You're going to get a 10.5% dividend every single month, and it's mostly going to hold its value similar to the way that a treasury bill does. Not entirely. It does seem like it's reducing in value a bit. And in fairness, so do treasury bills. There's plenty of them that are not as reliable as like an SGov or something like that. Like a TLT will swing a lot more than an SGov will. But essentially, that is what's happening right now. I already expected there to be a double peak and it continued to go down just based on the history of this previous chart and kind of like the psychological analysis of like what makes a company like MicroStrategy so popular. And what makes it so popular is actually this, is when it front runs Bitcoin, when it's able to go faster than Bitcoin is during the time where Bitcoin is still in recovery mode. So this is where Bitcoin bottoms as well. And it seems like a pretty similar journey for Bitcoin. Like this would have been whatever, like between 25 and 30K for Bitcoin. It dipped down again, and then it started to rise. This was the first time that Bitcoin hit a new all-time high. And as you can see, all-time high for it was 129. And then this is whatever that is, like 40% higher or something like that. Let me see. 48% higher. So not quite a double, half of a double, but slightly, almost identical actually, because it would have been from about 32K for Bitcoin to 74K-ish, which I guess if you measure it from there is more than a double at that point. So it just depends on if you're measuring from the previous peak or from this one. Regardless, that is what made me, I was in a call with somebody I believe in last December, and I told him my opinion that I don't think MicroStrategy is going to continue higher. And I've been correct since then. We had that one peak in July where obviously if you were holding anything exposed to that, it would have been good to take profits on it. And now we are very far below where it was in December. And you probably would have been better off just holding spot Bitcoin, because your cost basis was probably like between 80 and 90K, which we're just barely above now, but that's way better than being pretty flat. So that's what I think is going on with the war between Chase Bank and Strategy. Is just essentially a philosophy of, where are people going to continue to put their capital in the world of tomorrow? Are they going to put it in companies like this that find clever ways to leverage their Bitcoin stack in order to provide a dividend or a yield, which, like I said, I learned today, I believe is a cash on capital or a return on capital dividend as opposed to a normal dividend, which technically means it is tax deferred as far as I understand it. I need to do a little bit more research on that. I think it's like you don't really have to pay the tax on it until you're actually getting rid of the investment. If you were to sell 100% of the investment, I believe. I could be incorrect about that. Please correct me in the comments if I'm not. But that was my understanding of it, is that it's similar to a treasury bill where you're not incurring the same level of tax that you would be on a traditional real estate investment trust or something like that, where you're getting paid a dividend every month or every 3 months, which makes it an attractive product. In that example, like I said, if somebody with $10 billion worth of cash, they need to put it somewhere. Why wouldn't they put it somewhere where they're going to earn 10.5% a month instead of 3 or 4% or something like that? And it's highly liquid. It's tradable on the open market. So I don't think that this is going to stay down here forever. And I think it actually is going to represent a really healthy opportunity to either buy back into the stock itself, because the stock itself, they will continue to buy more and more Bitcoin and issue bonds in order to buy more Bitcoin, probably forever, at least as long as Michael Saylor is, attached to the company, because it's made them from a $500 million company to a $50 billion company. And I believe it was higher during this time. I think it was closer to 100 at either of those times. But that's kind of the point, is like the writing is on the wall. They're going to continue doing this. They're going to continue to, I really think, innovate Bitcoin-based bonds essentially before the larger financial institutions are able to do it. And they're going to force the larger financial institutions to try and, I just heard something before I started recording that JP Morgan Chase is essentially trying to create a separate stable coin than the ones that are approved by the Clarity Act that would be able to have yield on the base chain. And do a little bit more research on this, but essentially their hand is going to be forced, where it's not going to be good enough for them just to do the government-backed ones where it's 1-to-1 with US dollars, that they have to buy treasuries. That it's not going to be competitive enough for them if a company like this is able to issue bonds that are essentially 10.5% a month is where you're going to get paid. So what is a $4 trillion company that is in business with everybody going to do? They're going to do everything that they can to make sure that MicroStrategy doesn't get involved with the S&P. I think maybe this guy was when they didn't get that vote, and then that's been downside pressure ever since. And they're going to do everything they can to try and make this company go out of business. Now, I don't think that there's enough precedent for that to happen. I don't think that MicroStrategy gets margin called, even if their Bitcoin position does go into loss. I'm pretty sure that they have low enough interest and a long enough. I don't think they have to pay back their loans until 2028, and the price is not going to stay down forever between then and 2028. And I'm talking about Bitcoin specifically. But if Bitcoin specifically doesn't stay down forever between 2027, 2028. It stands to reason that MicroStrategy wouldn't either, because it's backed largely by Bitcoin. That's the majority of the treasury, which I know that that's what they're trying to make law, is that essentially the more you have in a Bitcoin Bitcoin treasury company, essentially, they're trying to say that it's a systemic risk for you to add a company like that to the indexes. Which doesn't make a lot of sense to me. I don't think that we really need to have a bunch of those companies in the indexes right now anyways. I do think it'll move in that direction where most of the companies on there will be forced to find other investment assets, essentially, that allow them to preserve their capital, because a lot of the capital is going to continue to get absorbed by the U.S. reducing foreign dollar demand. So there's just a lot of factors that are making the capital appreciation game competitive, and that makes MicroStrategy an easy target for someone like a JP Morgan Chase to try and bully, essentially. So just to end with a little bit of technical analysis, this is kind of the first time I'm talking about something that's not Bitcoin specifically. So let me know if you've enjoyed this video. Subscribe, like, comment, share, all of that stuff. But yeah, essentially, this is what we would be looking for as a worst case scenario. It's about 101. It already is having a reaction to these guys here, which is a pretty important level. And I believe even this, so this one actually corresponds to the bottom there. So this is kind of the range that I would expect. If Bitcoin has a major bounce back to the downside, we're going to see this from MicroStrategy very quickly. If Bitcoin is able to recover, we might get another push higher back towards the SMA for MicroStrategy in the short term. But any other time that it's broken the SMA on the monthly, it's been pretty clear that it needs to stay below it for a while. So that is more realistic, is that we're going to have to consolidate as low as here, I would imagine, 101, 102, and then it'll chop around there for an extended period of time before it's able to start going higher, which will also pull this SMA down to probably around here. So that's kind of what I would be expecting for next year, assuming that Bitcoin doesn't rocket. If Bitcoin does randomly rocket to 200K, like a lot of people are crossing their fingers for, then I think that there's a possibility we get back above this line and at least try and set a lower high. It's hard for me to believe we're going to get a higher high just because at this point in the cycle, there are enough other competitors, there are enough other narratives where strategy is not the big name on the market. Even here, this is when the IBIT ETF gets launched, and this is much better performance than the IBIT ETF over the course of 2024, but you just haven't seen it at all this year. It's really done nothing at all. So we're just seeing increased competition essentially for companies with Bitcoin exposure. And obviously this is the king of Bitcoin exposure. So it's going to get hit harder than everybody else. Thank you so much for watching. I think that's enough for this one. I'm not going to make a video tomorrow. I will probably be back for a video on Friday. I'm still kind of figuring out what the algorithm likes and what it does not like. So you let me know in the comments what you like, what you do not like.